Let's take a brief look at China's iron ore outlook and expected price forecasts for 2026. A reality continues to define the market. China remains the single largest carrier of global iron ore prices. Every policy signal from Beijing has the potential to impact steel production, commodity markets, and global iron ore trade flows. China consumes more than half of the world's seaborne iron ore supply. As a result, market trends are largely determined by two major forces: China's steel demand and global supply conditions. When Chinese demand increases and supply tightens, prices rise. When demand weakens and supply increases, prices fall. Historically, January to April is the strongest period for iron ore. After the Lunar New Year holiday, steel mills ramp up production, construction activity resumes, and raw material restocking accelerates. Additionally, Australia's cyclone season and Brazil's rainy season can disrupt exports and tighten global supplies. When Chinese demand matches limited supply, iron ore often experiences its strongest rally of the year. The market then enters a different phase. From May to August, iron ore typically experiences its weakest seasonal conditions. Major Australian producers increase exports ahead of fiscal year targets, while Brazilian shipments recover after the rainy season. Additionally, construction activity in China often slows due to rain, flooding, and extreme summer temperatures. The market often enters a correction phase when supply increases and demand softens. Policy developments have also played a key role in shaping market sentiment this year. In March 2026, China's National People's Congress placed strong emphasis on economic stability, infrastructure investment, industrial growth, and supporting domestic demand. The message was clear: policymakers are committed to supporting economic activity and long-term industrial expansion. Following the meeting, market sentiment improved as expectations for strong steel production in the second quarter increased. Another important stimulus was seen in April. China's Politburo meeting outlined measures aimed at strengthening fiscal consolidation, supporting domestic demand, and stabilizing economic growth. For the iron ore market, the key measure was potential support for the construction and property sectors. Why is this important? Because strong construction activity translates directly into higher steel demand and ultimately more iron ore consumption. Now let's examine the market's current and future trajectory. Iron ore started 2026 at around $106 per metric ton before declining to $99 in February. Following the National People's Congress in March and the Politburo meeting in April, prices recovered as markets responded to expectations of stronger policy support and improving steel demand. By May, benchmark prices had returned to approximately $110 per ton. The lower chart shows that prices briefly climbed to $112 per ton following the Politburo meeting, supported by positive policy sentiment and pre-May holiday restocking by steel mills. However, that momentum proved temporary. As weaker demand indicators emerged and seaborne supply remained abundant, prices gradually softened through the remainder of May. Looking ahead, the outlook remains highly dependent on policy developments and demand conditions. Under a supportive policy environment, prices could rise toward the $115 to $118 range. Conversely, weaker demand combined with increasing supply could push prices closer to $90 to $95 range. That makes July a critical turning point, with the upcoming Politburo meeting likely to play a major role in determining the market's next direction. These meetings will collectively help shape expectations for steel demand, infrastructure investment, and the broader outlook for the iron ore market. China's 2026 policy calendar will be closely watched by iron ore markets. July's Politburo meeting could bring fresh stimulus, infrastructure spending, and property sector support. October's economic meeting may introduce additional growth measures, while the party plenum will outline long-term industrial and manufacturing priorities. December's Central Economic Work Conference will set China's 2027 economic agenda and investment direction. For iron ore, the key drivers remain infrastructure, property, and steel production, with these policy decisions likely to influence demand and prices in the months ahead. In 2026, China's policy decisions continue to shape the iron ore market. For traders, miners, and investors, it's important to understand Beijing's next steps, because in iron ore, today's policy signals often become tomorrow's price trends. Thanks for watching. Stay connected to FETW Insights for more commodity market analysis and industry insights.